What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw another high volume selling day and a huge spike in volatility, so we need to start looking at the possibility that we're going through a full-blown stock market correction. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, I think we need to get this off our chest and we need to talk about Jerome Powell. So if you don't want to hear my rant, just skip ahead about 30 seconds. So if you listen to his testimony today, all of a sudden he's saying that inflation is no longer transitory and we need to start accelerating the tapering plan. This is exactly the opposite of what he just said less than 30 days ago, which is very curious on why he's just now saying this. So just one little thing to keep in the back of your mind is remember the same Jerome Powell that we had in 2018 when he talked about needing to overshoot the raising of the rates to fight inflation and then completely reverse course in 2019 after causing the taper tantrum that brought the market down about 20%. So don't rule out the possibility that a taper tantrum is a very real thing, and once we see momentum shifting in the market, the technicals are going to allow the bears to take over, and the bears are extremely hungry because they haven't eaten in over a year. So just don't rule out the possibility that if we see this bull market roll over, it could get ugly very fast, and all of a sudden it looks like Jerome Powell wants the market to roll over. That's where I'll end my rant, but I do think it's something to pay attention to. Alright, so jumping over to SPY, we can see that we were down 1.95% today, closing way below the lower Bollinger Band and just squeaking a little bit of a close below our 50 EMA. So by far, this is extremely bearish looking price action. It all happened on increasing volume, and as I always tell you, you want to get a lot more defensive when you see high volume selling, and we are definitely seeing high volume selling, slicing through a very critical support level, which was right around 456. So this is where I tell you to get more cautious because now we could start to see a full-blown stock market correction, and we could start coming down here to fill all of these gaps below, which are in the 450s, 440s, and all the way down here right around 436. So please be a lot more cautious from here on out. We lost the bull trend and price action is slicing through critical support. And even though I do think it's possible we do get a little bit of a relief rally from here, don't rule out the possibility it's just going to be another lower high before we continue to trend lower. So watch strong resistance levels right around 462 and our 20 simple moving average at 465, because if we fail to close back above those levels, we're very likely just getting another bull trap before we go down for another leg lower and start closing those gaps. Now, I also want you to remain objective as I always tell you to do, and the only reason I'm sounding caution to you right now is because we saw high volume selling and we did close below our only critical support level that we had to pay attention to at 456. Now, the other piece of information I'm going to give you is really not that bad, that if you look at closing prices only on SPY, from the all-time high closing price to where we closed today, SPY is only down just over 3%, which is absolutely a giant nothing burger. Dropping 3% in any bull market is just considered a healthy pullback, so I don't want you to just panic sell all of your long positions until we get a little more clarity. If we can't get back above this 50 EMA and stay above that level, then I want you to get a lot more cautious, but one day does not set a trend, and it's just way too soon to say that this panic selling is going to pick up and we're going to see a lot more selling. However, don't forget about what I said in the intro about Jerome Powell, because I do think it's important to remember what happened in 2018, because while history doesn't always repeat itself, it does often rhyme. So just be cautious here, and don't forget in the objective look at the market, we're just down 3%, but there is still the possibility we continue to go all the way down to close these gaps. So if I take it from the all-time high all the way down to the final gap close at 436, that's a drop of about 7%, and it is possible we keep going lower than that and get the full-blown 10% correction. So there's plenty of speculation we could sit here and do, but as I always tell you, we're going to remain objective. So right now, I want you to be very cautious the longer SPY stays below the 50 EMA, so by far the most critical level to pay attention to is 456. If we continue to break below this level, we still have support at 453, and then all of these gap closes below, which are right around 451, 447, 442, and then the 436 gap close, and we also do have our support trend line there as well. So breaking back above 462 and closing back above 465 will be the bullish price action to pay attention to. You can also see these Bollinger Bands are starting to expand after they did go through that contraction, which is going to allow for plenty more volatility, which we're definitely seeing with the VIX closing today above 27. Jumping over to the NASDAQ 100 triple Qs, you can see we also had another high volume selling day, and we did slice back down through that 20 simple moving average. So we're closing below our 20 simple moving average for the last 2 of 3 trading sessions. We're still above our support trend line, but we are needing to be a lot more cautious here, and we still see the Bollinger Bands contracting. So now that we're below our 20 simple moving average, our support trend line is right around 392, and below that we still have support at 388, and the 50 EMA is now at 385. So as you can tell, the triple Qs are holding up a lot better than SPY, and so far we still do have an uptrend because we're staying above our support trend line, and we are starting to lose the bull trend. So the only way the triple Qs can hold on to this bull trend is start closing back above 396 to 397, and that way we won't lose the bull trend, and we could see the triple Qs continuing their strength and continue to lead the stock market higher. We did see a lot of strength in stocks like Apple today, which helped the triple Qs stay up more than the rest of the market. But overall, we still need to be cautious now that we're seeing high volume selling and price action back below the 20 simple moving average yet again. So watch those critical support levels, and on the triple Qs, the bullish price action will be closing back above 397 and breaking back out above 401. If we get down below the 50 EMA and start closing below 382 to 383, don't forget the triple Qs gap is all the way down here at 360. If we look at closing prices only from the all-time high close to today's closing price, you can see the triple Qs are only down 2.52%. So even though these candlesticks and this volatility is looking very concerning, we can't lose the context that we're only down 2.5% from all-time high closing prices. So it's really easy to get overly emotional in times like this and forget the obvious that we're only down 2.5%. So while I'm giving you a lot of reasons to be cautious, I'm not trying to tell you to panic sell because we really haven't seen a major decline that's anything of note. We just see a lot of warning signs that I don't want you to ignore. Jumping over to the Dow Jones, you can see that we did close that gap below at 344 with the Dow Jones going down 1.79%. Remember that I told you if we start breaking down below 349, it's almost a guarantee we close that gap, and as you can tell, there's no more gaps to the downside on the Dow Jones. So the more likely scenario is that we get a giant dead cat bounce from here and try to go close the gap above right around 356. You can see we're still seeing high volume selling, but eventually you get to a point where everybody that wants to sell already sold and the only place to go is higher. So watch that critical support level at 344 because if we break down below that, we could be going down to 341 and 339. Below 339, look out below because we're going a lot lower and we're more than likely going to see the Dow Jones going into a bear market. Now to the upside, we need to break back above 349 and 351, and the 50 EMA of resistance is right around 354, and the full gap closes at 356. So there's plenty of resistance levels to look at above, and as you can tell, all of our moving averages are negatively sloping and we're building up a lot of bearish momentum. So the Dow Jones is definitely leading the way lower. So be very cautious at these levels and do understand we're closing way below the lower Bollinger Band and we're looking very oversold at these levels. So don't rule out the possibility that we see another bounce from here and we get another lower high before we continue to trend lower if we are going into a full-blown correction and possibly even seeing a bear market. Jumping over to the Russell 2000, you can see the Russell 2000 is in free fall and we continue to drop, going down over 2% today, closing way below the lower Bollinger Band, and more concerningly, we closed below 222. So now that we're below 222, it significantly increases the probability that we're going down to about 213 to 215. That's the next strong support zone now that we're below 220, so be a lot more cautious in the Russell 2000. If we do start closing below 213, we're very likely going to see the Russell 2000 going into a full-blown bear market, and do understand from the previous all-time high to today's closing price, we do have a full-blown correction officially in the Russell 2000 because we've now closed down over 10%. So if we continue to go lower from here, we're going to see a deeper correction or a bear market, so you need to be cautious of that in the Russell 2000. But just like the Dow Jones, it looks like the selling is getting overdone and we're due for a bounce. So look at the resistance above right around 222 and the full gap close right around 228. And our 50 EMA of resistance is right around 229. All of these moving averages are negatively sloping, so we're building up plenty of bearish momentum. So the bulls have all of the impossible challenge to get back above resistance, while the bears have the luxury of working with the direction of the trend. So don't get overly bullish on the Russell 2000 until we can get a decisive breakout back above 232. As long as we're below 232, this all just looks like it was a false breakout, and even though it could just be a correction before we go back higher, we want to let the price action prove it to us. On the Arkk ETF, we were down 1.15% today, closing back below that support level at 107, and we did get the full bear trend today because the 20 simple moving average crossed below the 50 EMA. So anything from here is going to be an easy bear raid because all the bears have to do is short at resistance and they have the direction of the trend in their favor. So more than likely, we're going to see Arkk failing at 107 and coming back down to the support level at 99. It might not happen quickly and we might get a lower high bounce before we go back down to that level, but as long as we have the bear trend and the price action below all the moving averages, we want to be very cautious in the Arkk ETF and we don't want to take on too many long positions. So right now you're better off being an Arkk bear until we reverse this bear trend and get all the way back above about 119. So the critical resistance levels will be 107, 114, and 119, and we still do have that 50 EMA, which is right around 116. On the VIX, we were up over 18% today, and this is the most concerning thing of all, is we saw the VIX getting back above that resistance trendline breakout, which was right around 26. So we now have 2 of the last 3 trading sessions with the VIX trading above 26, so this is definitely starting to look more like a possible black swan. Remember, if I zoom out here, you can see the VIX normally spikes and then gets crushed back lower, but now we're starting to get a confirmation of a breakout, so we could see another full-blown panic selling where we see the VIX getting all the way back up into the 30s and 40s and possibly even higher. I'm not saying that has to happen, I'm just telling you that the price action is looking like we're more and more likely going to stay above VIX levels of 26 until we get all of this figured out and see where the stock market wants to go. So anytime the VIX is this elevated, it means everybody and their mother is panicking and just dumping their positions, and like I told you in the beginning, once the momentum shifts to the bear side, it's going to be very hard to reverse because these bears are very hungry and they're ready to feast. So if the VIX can't get back below 26 and definitely back below 20, we're going to see a full-blown bear raid on the stock market, and they're going to continue to attack everything that's in a downtrend until the bulls can buy the dip and break those downtrends and scare the bears back into hibernation. So you're much better off just being cautious with the VIX this elevated and don't take on too many bullish trades. I know that's probably a little contradictory to what I was telling you with only being down 3%, but just like every stock market correction, you have to start somewhere, and 3% down can quickly turn into 10% down if you're caught with your pants down. So watch the VIX and respect these levels, and as long as the VIX is above 26, you just need to be extremely cautious. Jumping over to Bitcoin, we can see that Bitcoin tried to break out, and at one point it was trading right around 59,000, but we did see Bitcoin getting rejected, and we're still forming lower highs on the daily chart. So we still have lower highs and lower lows, so we still don't have any clear direction in Bitcoin, and right now we can start to see that we're getting rejected at resistance and trying to break down. So will Bitcoin break down and close below 52,000? Only time will tell. So continue to watch the critical levels. A breakdown below 52,000 is the bearish breakdown for Bitcoin, and a breakout above 60,000 is the bullish breakout for Bitcoin. Everything else is just ping-ponging in between a trading range, and it's completely irrelevant. So breaking down below 52,000, you need to get a lot more cautious and possibly even bearish, and a breakout above 60,000 will be extremely bullish. Everything else in between, I don't care about. Let's just wait for the confirmation of a breakout in either direction. On Amazon, we were down just over 1.5%, and we did hold up above that support level at 3,500, but we did close back below the 20 simple moving average, which means we could start to lose the bull trend. At this point, if Amazon closes below 34.62, which is our 50 EMA, I would just leave it alone and wait for it to see what it wants to do, because it could be going through a full-blown correction, just like we're seeing in the rest of the market. As long as Amazon is above 34.62, I still think you can stay bullish. You just need to be a lot more cautious because we're very close to losing the bull trend. Below the 50 EMA, we could be coming back down to 3,400 or 3,300. And below that, we could be coming all the way back down to about 31.85. On Tesla stock, we squeaked out a green day today, going up 0.68%, and we're regaining the bull trend slowly but surely, with the price action closing back above the 20 simple moving average and all the other moving averages for the second day in a row. If we can regain that bull trend and break out of this consolidation right above about 1175, we could see Tesla try to make a run at the previous all-time high at 1240. Remember, on a breakout above 1240, we're very likely running to 1400, and on a breakdown below about 1000, we're very likely going down to close these gaps below, right around $900 and 843. Anything other than that is more than likely just going to finish out this bull flag, getting rejected at 1175, and more than likely coming back down to about 1100. From there, we'll decisively see a breakdown or a breakout to the upside, so we just need to watch those critical breakout levels. Don't forget, there's still a gap above as well, right around 1208, and that gap has not yet filled. Jumping over to Apple stock, we can see that Apple was the honey badger of the day, going up 3.16% on a day that the rest of the market was taking a dirt nap. We see it went up on very high volume, which is very curious to see why is Apple going up over 3% when the rest of the market is selling off. So who knows the answer for sure, but all I can tell you is that is definitely bullish price action, and you can see we still have the very strong bull trend. So this is an extremely bullish looking candle, and we're very close to our next price target at 166. Remember, if we break out above 166, the next price target is at 168. And at this point, I think you just need to lock in your profits and wait till you see a lot more clarity. Yes, Apple could probably go higher, but this seems like a great place to take some profits and get a lot more defensive. But we still have a very strong bull trend and we're still above the previous all-time high at 157. So if you want to ride it out, I totally understand. To the downside, look for support at 162, 157, and the 20 simple moving average at 155. Below 155, get a lot more cautious because we're more than likely going to correct this bull rally. In the financial sector, we were down 2.39% today, closing way below the lower Bollinger Band, and we're definitely starting to see a lot of bearish momentum. At this point, we see more high volume selling, and this is definitely not good news for the bull market case. On the industrial sector, we were down over 2.5%, closing way below the lower Bollinger Band and building up a lot of bearish momentum. Again, high volume selling, which is not great news for the bull case in the S&P 500. On the healthcare sector, we were down 1.96% today, closing way below all the lower Bollinger Band and the moving averages, and this is not a bullish look for the S&P 500. The energy sector was down 2.34% today with price action below the lower Bollinger Band and below all the moving averages, building up a lot of bearish momentum. Again, this is not a great look for the S&P 500. So jumping back over to SPY, you can definitely see the sectors look like they're rolling over and dying, so it's just a matter of time before we more than likely see that in the rest of the market. This could just be all overdone and we're about to bounce from here. But again, I just want you to remember that this is exactly what early corrections look like. You see the rollover first, you eventually will get a bear trap and bull traps and you'll get a ton of whipsaws, but we're losing the bull trends and we're seeing high volume selling. So this is the time to not be messing around and get a lot more defensive. You're much better off just sitting in cash and waiting till we have clarity in this market. And as I told you last night, I could see the market going in either direction. Right now, it looks more than likely the stock market wants to go lower. Make the price action prove itself to you and make the price action tell you otherwise. But right now, I see a lot of reasons to be very cautious. And don't forget, once the momentum shifts to the downside, things can get out of control very quickly. And that's why I always tell you that bulls take the stairs up and the bears take the elevator down. You don't want to be caught over leveraged to the long side, sitting in an elevator that's going straight down and just crashing through floor after floor. I'm not saying that has to happen, but with the VIX this elevated and the price action we're currently seeing, it definitely looks like it's a real possibility. So give this stock market the respect that it deserves and don't be fooling around at this time. Also, don't forget about bank trade alerts, which will help you navigate this very volatile market. And I'm still running the Black Friday discount for 67% off your first month. Bank trade alerts is algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and it only trades the ETF TQQQ. So if you're interested in claiming the Black Friday deal for bank trade alerts or trying bank trade alerts out, now is the best time to do so. You can find out how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and help you stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.